Today on the Blockchain Report, Bitcoin sitting at 113K, and depending on who you ask, Santa's either bringing you 160K Bitcoin for Christmas or coal under 100. Poly market bettors are sweating six figures while economists say we could moon by 44% by year's end. And meanwhile, the US might finally make Bitcoin a strategic reserve asset because nothing says sound money like Washington trying to hoard it before you can. All that and more right now in today's show. Let's go! Good morning and welcome back to another episode of the Blockchain Report. I'm Hank Hudson coming to you live from San Francisco. It's Thursday, the day where your Monday motivation is officially dead and your midweek productivity is missing, and all you have left is blind faith in the next green candle. Now, before we jump into today's circus, let's do some financial meditation. And close your eyes, manifest some generational wealth, and smash that like button like it's a scene in a Michael Bay movie. And while you're at it, follow RoxomTV and me at Hank at RoxomTV on all platforms that matter, because getting your alpha from TikTok teens is now financial Darwinism. Is how financial Darwinism actually works. Now let's check who's mooning, who's melting in this morning's market rundown. Let's do it. All right, we're trying this out from the big board today. Let's see how things are shaking out so far. Right now, Bitcoin hovering above that 113K mark. We were as low as around 108, 109 just a few days ago, but we're starting to make our way back to the promised land, so things are looking a little better. Right now, Ethereum hanging out beneath 4,600 a pop, and Solana having a bit of a surge, up nearly 4.5% in the last 24 hours, currently sitting at about 215 a pop. Are we going to get TradFi up here for me, guys? They're working on it. It's a new board. It's a new day. And this is a live show after all. So remember, we're still kind of working out the kinks here a little bit. But we're seeing. You want to move on from TradFi? We'll move on. We're going to go to break. But when we're back, we have our first of two special interviews this morning, as we will be joined by Morgen Roschard to talk everything Bitcoin. So stay tuned. All of that and much more coming up in just a bit. Welcome back. Well, it's time for this morning's Bull Run, where we go over the top stories of the morning. And joining us today for our Bull Run, we have a special guest. And this certain someone has escaped the big banking hamster wheel. She went independent and then had the audacity to tell her clients about Bitcoin all the way back in 2016, back when most advisors were still calling it internet monopoly money. She's a CFA, a registered life planner, an author, a podcaster, and apparently still has time to make people's financial lives actually make sense. She's on a mission to merge traditional planning with Bitcoin, which basically means she's one of the few people who can explain estate planning and multi-sig inheritance without putting you to sleep. Let's give a big Blockchain Report welcome to Morgen Roschard, everybody. Morgen, welcome to the show. We're super pumped to have you. Thanks for joining us this morning. How are you?
Thanks so much for having me. What a welcome. Goodness. I feel like my head's going to explode.
Oh boy, I wasn't hoping for that, but we're glad to have you on the show either way. We'll keep things a little calmer now.
Yeah.
Morgen, For those in our audience that aren't familiar with you yet, I would love for you just to kind of give us, the quick rundown on who you are, what you do at Origin Wealth Advisors, and how Bitcoin ended up at the center of your work.
Yeah, definitely. I've been involved in Bitcoin longer than I've been advising on it. So I started working with my clients in 2016, like you mentioned, but back in 2013 was when I was really getting interested in it. It was when I met my now husband, and I had learned about it even earlier than that, but I just wasn't very involved. And so it actually felt like I was trying to hold, keep the horse in the stable by not talking about Bitcoin between 2023 and 2026. I specifically remember when I worked at UBS prior to starting my own business that like it was kind of water cooler talk where I would go over there and I would try to see who was interested in Bitcoin, and everybody there just thought I was just a nutcase. And no one wanted to hear about it. So, what's kind of nice about it though is that it sort of naturally happened in my financial planning practice. Like I was slowly starting to talk about it with clients who had questions about it, and it became something that I felt more comfortable talking about, even though there really weren't a lot of compliance regulations and other things about it. So I felt like I still had to kind of keep my mouth shut. But if somebody was asking, I wasn't going to tell them, oh, I don't know, because that wasn't true. So, and then by 2020, I felt confident enough that, okay, like, even though we only had maybe 25% of our clients either allocated or talking about it with us, by 2020, I thought, okay, this is what we're doing for our clients. We're going to make some sort of allocation on their behalf since we have discretion in a lot of accounts. And at that point, we were using GBTC instead of Bitcoin outright. But then just by using GBTC, we were able to get clients to actually want to own it on their own. So that is what I thought was kind of the most interesting thing about it, was that GBTC ended up being like this entrance point to people of like, oh, what is this? This is exciting. It went up in my portfolio. I want to talk about it more. And that's really kind
Amazing.
of how
I love the
my
idea of you being like, oh, go ahead. Sorry.
Oh, no, sorry. You go.
Oh, no, you're great. I was just saying, I love the idea of you being like the one person going around the water cooler, being like, hey, did you guys hear about that guy who spent 10,000 Bitcoin on a pizza? Like, what's up with that? But now, it's come very mainstream, and we're super excited to have you here and get your insight and expertise to chat about it. So, Morgan, what we're going to do now is go over our first story of the day. I'm going to let you sit tight for a second. We'll bring you right back to chat about it. Sound good?
Sounds great.
Okay, we'll be right back there. All right, well, apparently Santa, he might be delivering sats to you this year. Economist Timothy Peterson says that Bitcoin could still rip to 160K by Christmas, this Christmas, if it follows its usual fourth quarter magic, of course. Historically, Bitcoin spends September acting like a depressed teenager, if you will. It has never closed the month more than 8% higher than when it started, but then Q4 hits, and suddenly Bitcoin decides to get out of bed and put on a suit. Peterson ran the numbers and says Bitcoin goes up about 70% of the time between now and Christmas, with average gains of around 44%. You do that math today, and it spits out 160,000 per coin. Now, he admits not every year fits the pattern. Still, he thinks 2025 is lined up for positive, less crazy growth. Other traders are agreeing. One trader on X, who goes by Donnie and compares charts like people who compare astrology signs, says Bitcoin is front-running the usual September slump. He claims the pattern is the same as 2017 and the outcome is much higher. Donnie even pointed out Bitcoin is copying gold's trajectory after a lag, which makes sense because Bitcoin and gold have been cosplaying as each other for years now. So yeah, right now Bitcoin looks a little weak, lowest since it was in early July, but if history rhymes, Santa's bag might be stuffed with 160K Bitcoin instead of socks. I sure hope so. All right, bringing Morgan back. Morgan, Timothy Peterson says Bitcoin could hit 160K by Christmas if history repeats. Do you think these seasonal predictions actually hold water, or are they just the financial equivalent of reading horoscopes?
Both. So I tend to look at long-term trends for my clients and rather than short-term trends. And so Q4 to me is just a blip in the horizon, right? It's just like a cup of water in the ocean. And so like what we're trying to do with clients is zoom out, look at the macro picture of what is important for a client's portfolio, how we can align their personal goals and what they want to accomplish in their life with what is actually going to go on in their investment portfolio and with their savings. And so from that perspective, right, we don't really care whether or not Bitcoin goes down under 100 grand or if it goes to 160. That said, though, and I don't necessarily have a price target for Christmas like this guy does. And so maybe I'm like the coal in the stocking, I guess, for lack of a better term. And that's not me saying Bitcoin going under 100K. I just don't generally do price targets, and just tend to look like over the long term, right? Over the long term, for sure, Bitcoin's going to be over 160, right? I don't know if it's going to be there by the end of Christmas. But what I do know is that there are a lot of tailwinds basically that are helping it go in that direction, right? There's a lot of institutional inflows just through the ETFs. There's all these Bitcoin treasury companies now that are natural buyers of this because they're issuing stock to go buy Bitcoin. And so right there, and also we are in a very favorable environment from a political standpoint. We've never had people be excited about Bitcoin before in the White House, right? Instead of just attacking all of us and trying to put us in prison and take away our banking. So like I feel like from that perspective, right, we're in a good place where yeah, 160 is totally achievable by the end of the year. Whether or not that actually happens, though, obviously is a function of supply and demand.
Yeah, when you're talking to clients, do you take in any account like the seasonality of past cycles? Like we talked about, September traditionally not a great month for Bitcoin. And I know you're looking long term with your clients, but do you pay attention to any of that when you're guiding your clients, or you just tell them ignore the September sadness memes? We're looking at the big picture here. This is a hold forever type of thing.
Yeah, we try to avoid that. I definitely have clients asking about things like that and predicting cycles and where they project out what they think that they're going to have by the end of Christmas and so forth, just like any researcher would. But that said, right, these are predictions, right? And we don't have crystal balls.
Right.
And there's no way for me to actually know whether or not what that would be the case. What could also happen would be, okay, September sad typically. And so we have clients sell a little bit, right? And so that we can buy back more, but then we miss buying back in. And then the client ends up with less Bitcoin. And so my perspective is that we're never really going to get the bottom and the top right. And therefore, right, we can get the top, but maybe in the wrong way. Right? We could be buying the top instead of selling the top and so forth. And so I'd rather see a client buy, or anybody really buy when they have money to save, right? And sell when they actually need the money, and be planning along the way about whether or not that sale is something that they are predicting, right? Because the other thing that happens to people is that they're just buying along the way because they have the money to buy, but they're not necessarily thinking about what their short-term goals are, in which case they might be selling at a wrong time as well. And right, like you were mentioning on your intro, the poly markets are saying that Bitcoin's going to be under 100K, while this researcher is saying that we're going to be over 160. So, I mean, it's hard to know, right? It's like, who's right? In which case, if I'm listening to the poly markets, I'm selling. If I'm listening to researchers, I'm buying. And I don't want to put my clients in a place where they can't achieve their long-term goals because I was listening to noise along the way.
Yeah, that seems like sound advice. I got a feeling you're really good at what you do, because I think that totally holds a lot of water. But, you know, predictions are part of this space, and there's always a lot of analysts out there giving their 2 cents, including this trader Donnie, who we mentioned in the story. They're saying that Bitcoin is copying gold's trajectory. And like Bitcoin and gold, there's some kind of like long lost twins. Do you see that correlation as real, or is that just another chart fantasy, or are we kind of starting to get there finally?
I think that we're there. I think that we are there, honestly. And I think that we're going to break from there too. So Bitcoin is better than gold in every way. Right. I think it's hard for people to see in the traditional finance world. And so like there might be a period of time where Bitcoin and gold are kind of neck and neck and tracking each other. But Bitcoin is absolutely 100% going to outpace gold. Whether it outpaces gold by the end of Q4 and as a Christmas present to all the Bitcoiners, or whether it's 10 years from now and Bitcoin is just so far superior to gold and everybody sees it, like it's like a light unto the world and everyone now knows about it, is yet to be seen, right? And so, but I do think that when that occurs, that there will be a break, and that gold will not be nearly as appealing, and that Bitcoin will definitely take over, not most of its market cap. I mean, not all of it, right? Because it's something that people actually use in electrical engineering and so forth, and jewelry.
Yeah, it certainly seems to be that is the way that the tides are turning currently. And as someone who's been in this space for as long as you have, do you think that kind of chasing these end of year price targets helps people get excited and builds enthusiasm for the space? Or does it actually hurt adoption when Bitcoin misses these moonshot prediction prices that are thrown out there?
No, I think Bitcoin is like any news is good news. right? Back in 2013, like the news was the Silk Road was getting shut down and Bitcoin was all over the news about it being drug money and it being the worst possible thing and it's only being used for money laundering, right? And we still hear some of those talking points today. But did Bitcoin go away? No, more people got interested in it, right? And so I think that the more that Bitcoin is on the news, the more that Bitcoin is front and center in front of people, the more that there's even this FUD about it, or there's FOMO or whatever it is, right? There is going to be people who see that and they become interested in it and they learn more about it and they become adopters as a result of it. And there's always going to be the people who need to see it multiple times before they also become adopters. And that's what we've seen in every single cycle is that there are people who are holdouts and that they're not interested in partaking in it. And then we see people slowly getting involved. And then obviously everybody rushes in when there's some sort of extreme price movement, which I just think is like herd mentality in humans, and that makes sense. But I have seen it with my clients. Like I have clients who were absolutely not interested in 2020. I even had one client who was like, take this out of my portfolio. You can't put this in here. And this year wants it in their portfolio. So 5 years later, right? Yes, the price is obviously significantly different, but they're now saying, okay, this is something I am willing to hold now. And so I actually have all of my clients involved now. I don't even have the one holdout anymore. And sometimes these things just take time. And I think that it's hard for Bitcoiners who are, they're so invested in it. It's like part of their identity, to hear that people need more time. It's like it's against our nature. But if anything, it's just like patience is important in life in general, and that some of us need to exercise some of it.
Yeah, no, I think you're right. It feels kind of like any kind of publicity is good publicity for Bitcoin, and it kind of comes down to like the whole touch point things. You keep seeing it over and over again, you get a little curious, and that I think is often what starts people's orange pill journey, as we call it. So I think you're definitely right with that assessment. Stay tuned, Morgan. We'll bring you right back. I want to talk about this next Polymarket story with you in just a second. So if you ask Polymarket bettors out there, fam, Christmas this year won't be merry. In fact, it'll be under 100K.
You are fake news.
Now, bettors think, get out of here, Donald. Now, bettors think Bitcoin will fall below six figures before the end of this year. So gamblers are nervous, but analysts, well, they're split. You see, some still see 200K Bitcoin before 2026. Others say, prepare yourself for a dip. Presto Research says it depends on whether new buyers can keep absorbing the whales who love to dump Bitcoin out on the open market. Now, if demand keeps up, great. If not, 100K becomes a lot more realistic. Now, the irony here is that Bitcoin hasn't traded under 100K since June. As of this week, it was bouncing around that 110 to 113K level. But one whale didn't help things when last week they swapped over 22,000 Bitcoin for Ethereum because nothing says healthy market like a giant trader panic selling into the number 2 coin. Meanwhile, corporate treasuries are still gobbling up BTC. Metaplanet raised $880 million more to buy, and Strategy bought another 3,000 Bitcoin recently as well, pushing its stash to over 632,000. So demand is certainly alive, but headwinds do remain. Open interest in Bitcoin perpetual futures just surged to a 2-year high of over 310 BTC, with funding rates spiking from 3 to 11%. Vettel Lunde at K33 says that kind of leverage party looks a lot like 2023 and 2024, which both ended with liquidation bloodbaths. On the flip side, though, there are some catalysts. A Fed rate cut next month would be rocket fuel for BTC, and pro-crypto legislation like the Clarity Act is moving through Congress. So Polymarket bettors are betting on doom, but the analysts, they're split between disaster and a moon mission, which, to be fair, is pretty much Bitcoin's brand. We're bringing Morgan back. Morgan, Polymarket bettors are saying they are 61% convinced that Bitcoin will drop under 100K this year. I know you're not into future predictions, but do you think these kind of prediction markets are like wisdoms of the crowd? Is this just like high-stakes sports betting for crypto nerds? Should we be even paying attention to this?
Only 61%? That's not even that bearish.
No, it's not.
Slightly more than half. 6 out of 10 people.
Yeah.
Yeah, I mean, again, like I feel like it's possible, right? I wouldn't be surprised if it were under 100K by the end of the year. I wouldn't be surprised if it were over 160K, right? That is Bitcoin in a nutshell. I think one of the things that makes Bitcoin interesting and exciting to people, and also that people need to recognize about it, is that volatility is a feature. It's not a bug. Volatility is measured in standard deviation, which means that in order for it to have high volatility, in order for it to have like the increases in its value relative to the dollar, it has to have a high standard deviation in order to move standard deviations away from its mean. And so, right, and on the other side of that, right, it could be downside volatility, but you also need that upside volatility in order to get there. I think also I think that volatility, though, is starting to come down in general. We've seen, if you've looked at charts just of volatility, that like volatility by comparison has typically been much higher in other cycles compared to this cycle. I think that that's just a structure of Bitcoin becoming bigger and that a lot more money needs to move in order to move the price several standard deviations at a time. And so that does mean, though, right, if we're not getting that upside volatility, we're also probably not getting that downside volatility. I think it's actually unlikely that we see these 85% drops that we've seen in the past as a result of all of the large players are involved. That said, though, right, if there's a lot of leverage in the system, or all of a sudden, buyers have remorse or whatever it is because the price is going down, or all of a sudden the Fed starts tightening or whatever else it is, right? If we start removing liquidity from the market, then yeah, there's going to be a cascade of events. And the more leverage that there is, the more likely that we get something like a huge drawdown. 100K though, under 100K is not a big drawdown. I mean, we're talking about a 10% drop. This is not like this is just like putting table salt on your food for Bitcoin. It's just not a big deal. So I don't know why everyone's freaking out. 100K to me, I'm like, this is amazing, right? If you think about previous cycles that we've done. I mean, like if we went 100K, like, am I gonna think that we're all poor again? No, like it's like incredible that we're even talking about it, right? So that's my perspective on it. I wouldn't be surprised if we saw it. I also wouldn't be surprised if we didn't see it.
Yeah, I think it's just because the numbers now are so big, right? Like it's only, 10%, 15% drop, which is a pale in the bucket compared to what we've had in past cycles. But now that means, $10, $20, $30,000, people start freaking out. But you're like, look at the percentage. It's negligible compared to what we've seen in some of these past cycles. So yeah, I'm on
People
board
get
with you
very
on that
anchored
one.
too. Like they get super anchored around prices. So like 100K is really meaningful for people, right? When the price was going up last year and hit 100K, right? See, we're through this huge party. He couldn't believe it. Everyone is like, 100K. We all have laser eyes on, right? It's incredible. Right. And now we're like, oh my gosh, if it goes 100K, under 100K, it's like the end of the world. It's like we're anchored around this number and that it's meaningful, but the reality is that it's just another number.
Yeah, you're totally right. It's like when it reached 100K, Bitcoiners everywhere are like, we made it, we're here. And now it's like, if it's under 100K, it's like, we're no longer here. No, we're still here. We're still very much here. It's just the usual fluctuations with the orange coin that we know all about. Analysts in the story were also saying if buy-side demand were to dry up and Bitcoin under 100K becomes very plausible, I'd be curious from your seat at the table, how do you go about coaching clients through that kind of fear, especially when price headlines make people panic and you're introducing some of your clients to Bitcoin for the first time, although I know you said you've gotten all of them orange pilled to this point. But how do you go about that for these first timers out there?
Yeah, so that we manage through position size. And so, right, for a lot of Bitcoiners, that's really hard to understand because they're like, okay, what else would you possibly buy besides Bitcoin? And I'm 100% Bitcoin. Fine. Okay, for some people, that makes sense. For a lot of people, that's not going to make any sense, right? And they're not going to be able to survive some sort of incident like a 15 to 45% down draw in all of their assets, right? In which case, we have to look at their total portfolio and what makes sense for that client's specific situation, for their objectives, for their time horizon, for their unique needs, and for what they need in their life, and then decide what is going to be an appropriate Bitcoin allocation. And for the average person who's just getting into it, right, that's going to be somewhere between 5 and 7% of their portfolio. It's not going to be these huge numbers, in which case, if 5% of their portfolio drops, like it's not a huge deal, right? It's when everything starts to go down together. And we've seen that in the past as well. So we have to coach clients through that as well, right? If like there's some sort of tightening that takes place in the market, liquidity dries up and so forth, right? That might not just happen in Bitcoin, that might happen in all risky assets, in which case we need to be mindful about what we're putting in a client's portfolio that might be correlated with Bitcoin so that they can tolerate these down draws. And I would say that that's going to apply to anybody's situation. You need to be mindful about what kind of risk appetite you have and what you're willing to do, but not just what you're willing to do, what you're able to do. People often think of risk tolerance as just like, oh, I like to go skydiving and I like to gamble or whatever it is, and I have a high risk tolerance. But that's not actually what it is. Yes, that's part of it. But also the other part of it is that you need to address your ability, right? So somebody with a lot more net worth, right? Somebody like Elon Musk has a lot more ability to take risk than, let's say, somebody who is $100,000 in student loan debt, right? Because you can't just look at somebody's, willingness, right? The person who has higher willingness maybe has higher willingness than Elon Musk and he can go all in, but he doesn't have any ability to do so, right? You need to also look at how often you're paid, how secure that income is, what your savings rate is, right? Whether or not you have a family that you need to provide for, right? Somebody who has a family and they have a lot of children, right? They might want to have a bigger emergency reserve that's outside of Bitcoin than somebody who's just a single guy who it doesn't really matter whether or not he loses, not that it doesn't matter, but right, it's less affecting of other people if that person loses their job, right? And they have more time to assess what they're doing or maybe move back in with a parent or so forth. And so all of these things play into your risk tolerance. And if anything, ability should take more precedence than willingness, but people tend to only look at willingness.
Yeah, that makes a lot of sense. And it seems like you take a really comprehensive view for each of your clients' individual and personal situations, which is exactly what I think any of us would want in a good financial planner. So we're going to talk more about that with you in just a bit and how you approach these things with your clients, because I'm sure we have a lot to learn from you. Hang tight here, Morgan. We're going to go another story here. I'll bring you right back after I read it. After 6 straight days of bleeding cash, Bitcoin ETFs finally caught a bit of a pause. Caught a pulse, on August 25th. They pulled in 219 million of inflows, breaking a week-long outflow streak. This comes after about $1.2 billion walked out the door between August 15th and August 22nd. Now, the rebound was led by the big dogs. We're talking Fidelity's Wise Origin Bitcoin Fund. They raked in about 65.6 million themselves. BlackRock's iShares added 63.5 mil. ARK's 21 shares chipped in about 61 million themselves. Together, those three accounted for nearly all of the action. Bitwise managed about 15 million. Grayscale got about 7 themselves. VanEck scraped up 6.3 mil. Meanwhile, Invesco, Valkyrie, WisdomTree, and Franklin Templeton had the honor of recording 0. Investors apparently decided they'd rather hold their breath than touch those funds. So yes, it was a rebound, but not everybody got invited to the party. Here's the twist. So while Bitcoin ETFs clawed back to 219 million, Ethereum ETFs smoked them with 444 million in inflows the same day. BlackRock's ETHA fund alone hauled in 315 million. Fidelity's FETH grabbed another 87 million, and a few smaller funds made up the rest. So what was the big takeaway from all this? Well, Ethereum is currently winning the ETF popularity contest. Bitcoin's flows look like a bit of a comeback, but Ethereum's look like a stampede. Some are arguing it's ETH staking yields. Others say it's the narrative that Ethereum is infrastructure while Bitcoin is just money. Either way, the chart says Ethereum funds are in beast mode, but here's why this all matters. Institutional flows tend to set the tone. A week of redemptions doesn't mean Bitcoin's dead by any means. A day of inflows doesn't mean it's moon time either. But it does show that big money is still watching, still moving, and still treating Bitcoin like a core asset. The question now is, was this a one-off bounce or the start of another leg higher? Ethereum may be stealing headlines, but Bitcoin still has the fixed supply, the global brand, and the trillion-dollar network effect. So let ETH enjoy its ETF sugar high. Bitcoin is still king, and when it comes to long-term inflows, Wall Street always comes crawling back to the crown. We're bringing Morgan back now. Morgan, Bitcoin ETFs bounced back with $219 million of inflows, but Ethereum ETFs doubled that nearly with 444. Do you think this is a real shift in institutional appetite or just a short-term Ethereum sugar rush?
If it is a real shift, it's very, very sad because that means that whoever is out there educating these people on what they're supposed to be buying on behalf of their institutions and clients is extremely flawed. And they're going to unfortunately find out the hard way, like everybody does on all of these cycles when they get involved in altcoins and they realize, oh, actually, I really just do want to hold the world's best money. I don't want to hold some sort of junk coin that is promising to be something that it'll actually never become. And so I deeply hope that whoever's out there educating is not doing that and having people split between Bitcoin and Ethereum. But obviously something is going on in the marketplace. What could be, honestly, is that a lot of these institutional buyers, and also don't hold me to this, I don't actually know, I'm not in the institutional space, but a lot of institutional buyers could have already been allocated related to Bitcoin, and they could be rebalancing. And a lot of the outflows that we could have been seeing was from like position sizes increasing so much that they were beyond what's called their tolerance bands. And so in a lot of these institutions, they have set percentages that they need to hold in their portfolios. And from there, what they have to do is if let's say there's volatility in that market and it either goes up too high or down too low, they either need to trim the position back to the original size of the position, or they need to add to the position, right? In which case, like this summer outflows might have been a lot of trimming given the run up that Bitcoin had. And maybe some of these inflows that we just saw were them re-adding to some of these positions to get them back to the original percentage that they wanted to have. And then maybe also seeing some Ethereum inflows could be that now they're thinking they want to actually add that to their portfolio, and that could be why you're seeing larger positions go into that versus Bitcoin. Again, this is all conjecture, and that's kind of what I hope is going on, because that would mean that institutions were being led correctly, and probably have much larger positions in Bitcoin than they actually do have in Ethereum. That said, I wouldn't put it past these educators and so forth who have these funds to sell. Ethereum, for some reason, has always been a really cool story to people. And that people want to see this technology, this extremely, slow database be something that people can use. Ethereum has tons of problems. I mean, staking alone is a huge security risk to the network, right? I mean, it's just that, like, I think I saw, it was a paper from Stanford, actually, where they said that in order for proof of stake to be secured, they had to actually secure it on proof of work, Bitcoin's blockchain, which would obviously make Ethereum ridiculous if they had their own proof of stake network that they had to like secure back to Bitcoin. And these are like, researchers who know a lot more than me, right? I mean, if we think of very far back, right, in 2016, this is obviously even centralized back then, even though they were saying it was decentralized, where they had a hack and they just created Ethereum Classic and they have the Ethereum new one and they moved everybody over to the new Ethereum. That to me is like, it's just, that to me seemed like game over back then. Obviously, 9 years later, we're still here. And so, and like, I see them doing that every single time, right? They wouldn't have been able to move over to proof of stake at all if they weren't centralized. So the fact that they're calling themselves a decentralized smart contract network, that we've got like the infrastructure, quote unquote, that Bitcoin doesn't have, it's just the wrong story. And at the end of the day, people want sound money. They don't want some sort of random, internet project that may or may not succeed. And people learn that, unfortunately, the hard way.
Yeah, Morgan, tell us how you really feel about Ethereum. Oh boy. Now, let's rein it back to Bitcoin though. Their ETFs now have seemingly proven that they can bleed billions in outflows and still bounce back. Do you feel like that resilience strengthens Bitcoin's digital gold narrative in your mind at all?
Absolutely. Yeah. I mean, what we're seeing from institutions is that they're considering this a core portion of their portfolio, right? I mean, if that doesn't give validity to the sound money argument that Bitcoin is claiming that it is, that it's digital gold, I don't know what would, right? I mean, if they still thought it was magic internet money or monopoly money, right, they wouldn't be including it in their client portfolios. And I don't know what the average percentage is in these institutional portfolios, but they don't take like, 0.5% positions, right? They're probably at a minimum, we're looking at probably 1 to 2%. Most people are probably taking at least 5% positions, which on these, large portfolios is significant. And if they're going to be rebalancing it, they're going to be rebalancing it fairly often, right? Because as we've been mentioning, Bitcoin is highly volatile. And they set those tolerance bands generally like wider for volatile assets, but they still need to rebalance back. And again, that means that it's a core asset in the portfolio if they're willing to do that. And that's giving Bitcoin, in my opinion, more validity from an institutional standpoint than it previously had.
Yeah, I mean, I think the writing seems to be on the walls every day. You get the headlines, and it's institutions. Once BlackRock got involved the way they did, I was like, okay, like we're in good shape. So yeah, I think we're very clearly trending in a good direction right now. I think right now, though, I would love for us to go ahead.
Oh, sorry. I would say too that not all institutions are involved. So one of the things that I find kind of interesting is that even with BlackRock and saying all the things that they're saying and their ETF getting as large as there is, not everybody is still involved. And so like there are more natural buyers that are going to come in and include these percentages in portfolios in the future, right? And whether or not they do that in Q4 obviously is, yet to be seen. But our time horizon is forever. So I mean, we're just sitting here waiting.
Yeah, absolutely. There's still so many people that have yet to jump in the game, but BlackRock is in there. So for me, it's like, how much more proof do you need? But there's still a lot of room to run, which is really exciting about this space right now. And I am really excited to talk a little bit more about you and your background. So let's run the stinger, guys. We're going into our deep dive. Let's do it. Bueller? We can skip Bueller. There it is. Okay. Beautiful. All right, we're back with Morgan. Morgan, I want to talk a little bit more, or start talking a little more about your background. You mentioned you got into Bitcoin all the way back in 2013. You started advising on it about in 2016. I mean, that's kind of like spotting Beyonce before Destiny's Child was still a thing. So you kind of had that vision of what was going to make it special. So that makes me wonder, what made you take it seriously when a lot of people on Wall Street were still calling Bitcoin a scam at this point in time, or a Ponzi scheme?
Yeah, it's a good question. I don't think I had a traditional upbringing like many folks. My parents were Ross Perot voters, so that kind of gives you an idea politically
Oh.
we were leaning. And my parents were very good about explaining things. They were not, they weren't heavy discipliners. They didn't let us do whatever we wanted, but they did sit us down and explain almost everything to us, almost to the point of it being annoying. I remember whenever I got in trouble, I'd have to stand on a certain tile in my parents' kitchen, and then they would just talk me to death. And honestly, it was just not worth doing something bad because it's just like a lecture, you know? But they not only did that as disciplinary, but they also did that with everyday things. And so my dad would sit down about the financial system with me. He talked about what insurance was. He talked about why all the political parties are no good, right? And so these were kind of things that I heard growing up. And so in high school, I got really into Ayn Rand. And then in college, I got very into Austrian economics to the point where it actually made my schoolwork difficult because I had to take like micro and macro and learn Keynesian economics. And I didn't do so well in macro as a result of that. I mean, I tried my best, but I got into it with the teacher quite often. And it led me into finance. I originally thought I was going to be a doctor because in my family there's a lot of medicine. And I ended up on the floor of the American Stock Exchange getting a bunch of yelling guys who were trading in an options pit coffee. That's how I got started. But from there, I've always been kind of curious and asked a lot of questions. And I switched into wealth management in 2010. And at that time, I was reading the Mises blog very regularly. And so when I read about Bitcoin on their blog, I believe it was in 2011 or 2012, like I took it seriously and I tried to buy some, but I just couldn't quite figure out how to do it as like a single woman in New York, a young single woman in New York at the time. I didn't want to get into trouble and I didn't want to end up in a situation where I was trading, cash for Bitcoin on the street. That seemed very not the right thing to do. And so I just kind of forgot about it. And then when I met my husband and he was just like, Bitcoin all the time, it was hard to like not take it seriously. I feel like I've been so interested in this stuff to begin with. And then also like if I weren't taking it seriously, that would mean that I wasn't taking a lot of what my then boyfriend was saying seriously. And that to me was like, okay, then I should maybe question my relationship. And so I started to get more interested in Bitcoin and learn more about it. And it was actually really podcasts at the time that really helped me along to get me where I was. And then when the validity, though, of having clients starting to ask questions about it, I think really pushed me over because like in the past, I just thought it was, okay, it's just these weird libertarians like me who are interested in this thing and maybe it won't actually ever become something. But when I had a client who she's in fashion, like she's not running in these, bizarre libertarian circles like we were. Like she's just an everyday person and she had questions about Bitcoin. And it's like, oh, okay, like this is not just for the anarcho-capitalist plebes here. This is something that other people are actually interested in. Like, let's talk about it. And we did. And then, shortly after that, I had another client who's a writer. There's no reason why he would be interested in Bitcoin. He's not like a libertarian. But yeah, no, he had a friend that had suggested it to him and he wanted to know my opinion. Right. And it was like that. It was like every single person that I was talking to in my practice, they're everyday people who have everyday lives with kids and families, and they're doing whatever it is that they want to do. They were hearing about this thing and they were saying that people were telling them that they shouldn't pay attention to it, but they found it interesting. And so they wanted to know my opinion. That to me is it's very telling of what's going on right in the world in general, is that there's some lack of trust in the system that requires trust. And people want to know what they can do to maybe have just something else And that's kind of how it seemed to me at the time. And then to have somebody validate that, right? As opposed to a financial advisor being like, well, you know, we don't understand that. You don't understand that. You don't invest in things that you don't understand. That's what Warren Buffett says, right? So like, I think that having a client being like, having legitimate questions, having those questions actually answered, and then me not pushing it, right? Me just being like, if you want to buy some, great, I'll help you. And if you don't, then that's okay too. We just keep talking about it. Whenever you have a question, you just let me know. That's how I've made my practice what it is. When my book came out though in 2020, because I had been running in Bitcoin circles for so long, the way for me to promote my book actually was to go and reach out to all the Bitcoin podcasters that I know and said, hey, I wrote this book. It's about, you know, traditional financial planning, but Bitcoiners need that. And here's why. And maybe you want to have me on your show. Like I'm pro Bitcoin, but I also am pro, you know, having sound finances in general. So like we could talk about that. And I was able to get on a bunch of larger podcasts about like Bitcoin financial planning, basically. And from there, Bitcoiners were like, oh, I need that. So now I would say my practice is it's about 50-50. I have like legacy clients who, you know, came in sort of the traditional route, but like half my clients now are just people who are Bitcoiners who had, you know, large Bitcoin positions. They need financial planning. No one will touch it. Which is to my benefit, right? That's actually what I want to work on is like these large Bitcoin positions and help people achieve what they want to achieve financially, and do it in a way where everyone feels good about it.
Well, it certainly sounds like through your book and the way you go about explaining things, you've done a really great job of building that trust with your clients at Origin Wealth Advisors, which makes me wonder, like, what makes Origin different from the average or typical financial planning firm, besides the obvious fact that you won't roll your eyes when someone mentions Bitcoin?
Yeah, that's a great question. So beyond that as well, I mean, we offer comprehensive financial planning. I don't like to use that term because I don't think that people actually know what that means. But what it literally means is that we act as a client's CFO, like a personal CFO, where they can run any financial decisions be like by us. And in addition to any financial decisions that they have, we also have a huge list of topics that we want clients to go through on a regular basis to make sure that their financial situation is buttoned up in all of the different categories. So for some people, that's just going to be like budgeting, basic budgeting of like what's coming and what's going out. Let's create that net surplus so you can go save in Bitcoin. There's going to be education planning for people. They have young children. They want to make sure that they can either afford private school or send them to some form of a college or technical school, whatever it is later. For some, like we also review insurance. We don't sell insurance, but we like do an insurance review to make sure that our clients are covered. So if there's some sort of situation or incident that comes up, that they don't basically wreck their financial situation. And in the process, we review tax planning, which not a lot of firms do because they don't want to touch it. They always say, talk to your CPA. Again, we're not CPAs, but like, you know, I know like the basics of taxes and I can read a tax return and so forth, and we can guide clients on how to legally save taxes in a year-over-year basis. We look at retirement planning. Some people want to retire early. Some people want to retire when they're 65, but we still want people to look at what the numbers are so that they can make a reasonable decision about what makes sense for them and their family. And then lastly, we look at estate planning. So some firms will just make sure that you have basic documents on file. We actually review those documents and we make recommendations, and then we send them to an estate attorney. That way, when you walk in with the estate attorney, you're not like, what do I need? And then the estate attorney can just like list all these trusts that they think that you should buy. We have like clients go in there and they're very poignant about what it is that they need and what it is that we've told them to do. And then with all of that, we weave Bitcoin through. So in estate planning, right, there's also multi-sig and making sure that there's inheritance protocols for people's Bitcoin. With tax planning, it's like, where are we holding the Bitcoin? How are we allocated it? Is it something that we want to hold in a retirement account or in a personal account? And making sure that we're doing it in a tax efficient manner. Retirement planning too, it looks really different, I would say, with Bitcoin versus with traditional assets. So we're planning for that in a different way, like how we're taking withdrawals or what we're looking at as far as capital gains tax and so forth, if somebody's going to sell in order to fund a lifestyle. So there's a lot of different aspects of it that now have a layer of Bitcoin on top of it. And so I would say that that's what really makes us different, is not only are we doing that planning, but now we're weaving Bitcoin into it. It's not just something that's in the investment allocation. And I didn't mention investments, but obviously like that's what we do because we're financial planners. We do manage clients' assets as well. And so I would say that's like bare minimum of what practices have to do to be a financial advisor, is that you have to manage assets. Not only do we manage assets, but we offer all of these services on top of it.
Amazing. And specifically kind of reining things back into Bitcoin, it's still a relatively new part of the financial ecosystem. So From your seat, I wonder, what are some of the biggest mistakes that you're seeing Bitcoin families make when it comes to planning their financial lives right now? Because we're still kind of treading in some relatively new waters here.
Yeah, so Bitcoiners tend to be in extremes in general. I think that's how we ended up with a lot of Bitcoin, right? Is that like in that bell curve or so forth, you've got people really far in
Yeah.
either direction. In finance, that's like people who spend quite a lot or don't spend enough, right? And so I've got like those who are just 100% prioritizing Bitcoin over everything else, and they're oversaving actually. And while some people think, oh gosh, what a hard problem, be oversaving, it actually can be, right? It can be if you've got a family and you have needs and so forth, and like you're having trouble actually spending on the things that you need on a day-to-day basis. So we've got some of those folks. And then we have other folks who are like, well, Bitcoin's going to go to 2 million, by the end of next year. So like, why are we doing any of this budgeting? And the reality is that we're not there yet, and we have to live in the financial reality that we're in. And so we still need to make sure that we're not overspending now, right? Because if you overspend now and you sell all your Bitcoin, right, then when Bitcoin does eventually go to $2 million, which I'm sure that it will do, I just don't know when, you might not have what you originally were going to have to make your lifestyle be what it is that you want to be in the future. So that's what I'm seeing as a major mistakes. Other mistakes I'm seeing is just Bitcoin storage. For instance, like we've got Bitcoiners who are really hardcore, but maybe they didn't involve like their spouse so much in how they're storing it. I'm not saying the spouse isn't on board, right? In a lot of these situations, the spouse is on board, but they just feel really, really uncomfortable with the hardware wallet setup and so forth. So it's really important to not only like have buy-in from your spouse, but also teach them how to use these things, because if something does happen to you at the end of the day, like if your wife can't access it, then what have we done all of this for? So it's just making sure that like what I recommend to people is like a Bitcoin date night where you literally just send like, $20 around and until you're out from transaction fees. And that way everyone's practicing. You should do that every 6 months or so. And that way people know how to use these wallets and so forth, right? They change over time, so hopefully things will get easier for people. But right now we're still in a stage where, practice does make perfect. So
Yeah, absolutely. And when you're introducing people to Bitcoin for the first time, I'm sure you've orange pilled your fair share in your day. What do you find is usually their aha moment when they realize that they want to make Bitcoin part of their financial plan?
yeah, so it's what is the problem that we're trying to solve? And I think that it's more obvious now than it's ever been, right? And after people have experienced massive inflation and there's a lot less trust in the system, it's really obvious to explain to people why they would want to have a money where no, you don't need to trust anybody. You can actually verify it yourself. And for a lot of people, like don't trust verify doesn't really make sense because they don't read, code and so forth. And so using that as an argument, maybe prior to massive inflation that we've had after COVID and so forth, and all the other things that have happened in the last 5 years, I don't know if it was necessarily as relevant. I think that it was still what we were trying to do from the beginning, but now people get it immediately. When people hear that this is something that's outside of the system, they're excited about it, even if they're not necessarily that, that anarcho-capitalist libertarian that I was mentioning earlier, right? It's something that makes sense because they saw their price of eggs double. They see that their grocery bill has doubled. They see that going out to dinner now, no matter what they do, is very expensive, even if they're just ordering pizza. Like all of these things are people have seen their budgets explode and they don't understand what's going on. And so you don't necessarily need to know that there's some sort of sinister Federal Reserve or whatever it is operating in the background. But people do see that there are problems with prices. And so that to me, I think is the biggest way to get people involved is just to show them what the problem is and show them how Bitcoin can be a solution to it.
Yeah, that makes a lot of sense. And you have this really great background as an educator. I mean, you have got podcasts, you write books, you do workshops. How does your background in being an educator feed back into the way that you actually serve your clients one-on-one?
Yeah, I love that. I find it's like it's a double-edged sword. So like my clients help me be an educator, and then being an educator helps my clients. It's like this little nice feedback loop, circular economy, I guess, so to speak. Yeah, because I learn from my clients' everyday situations, right? And I get to hear about things that I maybe otherwise wouldn't have, and then get to problem solve about it. So one of the things I like about my work is that it puts me in a place where I'm not always doing the same thing every single day, right? Obviously, there's some monotony to every single job, but every now and then, like we get a really new situation. We have to think about very critically, okay, like what are the current financial tools that are out there that can help this specific problem that maybe haven't been used for those before. And so that's really exciting. And then when we can apply it to a specific situation, now all of a sudden I have an education that I can provide to other people because we've now done it practically, right? And now I'm educating people, okay, this is what we need to be doing because we've seen this specific situation before. And then people have questions about it. And then when I get questions from people, then I'm actually able to further apply that to my client work. So I think if anything, also educating in general kind of solidifies the information and keeps it to like tip of tongue rather than it being like a constant need to look things up. Just give me a minute here. I'm going to look that up for you, right? Rather than just being able to roll off the tongue and give people advice on the spot. And I think people have a lot more confidence in somebody who can, mostly tell them from the get-go, like what they need. And then obviously, like if I don't know something, I tell them I don't know. I don't want people to like be operating on faulty information, but it does help to be able to converse fluidly about it.
No, absolutely. And you've done a really great job of breaking down all these things today, so I can understand why you're so good at what you do. And when I was checking out your website, I saw something that was interesting. You chose to go fee only from day one. And so it makes me wonder, like, why was it important to you to not be another advisor who sells random products on commission and to go this other route instead?
Yeah, so maybe this is going to be out there for people, but for those of you who are religious, like I answer to God. Integrity is the most important thing to me. If I have conflicts of interest in my practice where I'm more likely to sell a product or do something to get more money in, then I think that that's a problem. It doesn't necessarily mean that I would do that all the time, but I don't even want that to be there. So what I've tried to do in my practice is just minimize conflicts of interest almost entirely. We've gotten to the point where we really don't have any conflicts of interest in a practice. I bill based on net worth rather than assets under management because that takes away the conflict of me trying to get people to move assets to my firm so I can get paid more rather than just looking at a total financial situation. I don't sell client products to anybody about anything. We just sell advice and keeping it simple so that people just have one fee and they don't get nickel and dimed for all sorts of things along the way, right? It's not going to be for everybody. Some people are going to say the fee's too high and they're not going to come in. And for other people, they like that. They like that, okay, I know she's never going to charge me more than this. She tells me every year, this is what my fee is. And everybody is aligned in that respect. And then I feel good at night. At the end of the day, my integrity is one of the most important things. I'm not going to like put that on the line for additional money. I'm just not going to do it. And I answer to God. And so I feel that it's important that I maintain that relationship as well and that I do the right thing because it is the right thing to do. And I think that more financial advisors should operate that way rather than trying to just get more money in. At the end of the day, right, the game is a long-term game, just like we've been talking about with Bitcoin. I want my firm to last forever. I want my firm to have a good name. I want people to think of me that I'm somebody who's trustworthy rather than somebody who's just, in for a quick buck or a scam.
I love that. I mean, a financial advisor with integrity, with a forward-thinking look on the monetary system. I got a feeling you've made a lot of new fans in our audience today, Morgan. So before we let you go today, between your book, your company origin, yourself as with your hot takes on X, what are the best places our audience can go to get more information about you and everything that you're doing over at Origin?
Yeah, that's a great answer. Question, excuse me. You can find me on Twitter. I'm at Morgan, X, sorry. You can find me on X. I'm at Morgan with an E, Roschard. My husband and I have a podcast that's called Bitcoin for Advisors. We've been slackers lately, but we do intend to get at least another episode or two out before the end of the year. I have two businesses. Origin Wealth Advisors is originwa.com. That's my financial planning practice. If you just need some Bitcoin consulting, you can find me at moneyowners.com. And I'm currently working on a book that's specifically geared to Bitcoiners who want to do more with their personal finances. It won't be anything like any other TradFi financial planning book out there. About halfway through now. If you want to get an email about it when it comes out, you can find it at bitcoinpersonalfinancebook.com.
Amazing. And you had your other book that's already on Amazon that I checked out and has rave reviews. What's the title of that again so our audience can go check it out themselves?
I'm the worst at promoting myself. Goodness. So that is the Personal Finance Quick Start Guide, and you can find that on Amazon. All the data is from 2020, and I'm not looking to update it, but all of the financial planning principles are timeless. And so while the tax planning might not be as relevant, you'll have to look up your brackets. Everything else should be fairly timeless and good. There is a tiny little Bitcoin section in there because my publisher wasn't as keen on Bitcoin back then when we were writing it, when I was writing in 2019. But it's okay. You can still find all sorts of good Bitcoin information out there, even if it's not in that book.
Yeah, well, people should definitely check that out. I checked it out myself. It has like 4.7 stars, over 800 reviews, so it's got to be some pretty good stuff in there. Morgan, I want to say this interview has been pretty great stuff from you. We thank you so much for joining us on the Blockchain Report today. We hope to have you back real soon, and I hope you have an amazing rest of your week. Thanks for joining us.
Thank you, Hank. It's really nice to be on. I hope to come back.
Yeah. Sounds great. Thanks, Morgan. All right, we're taking a break here at the Blockchain Report. We'll be right back with more, including our second guest of the day that you are not going to want to miss. So stay tuned. We'll be back after this.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
welcome back to the Blockchain Report. We are going to dive into our second deep dive of the day, and our next guest went from captaining ships across real oceans to captaining ideas across Bitcoin Twitter. He's written some of the most important books in the Bitcoin space, Sovereignty Through Mathematics and Everything Divided by 21 Million, the latter so influential it basically became a rallying cry for the entire movement. He coined the meme that turned into a mindset, runs the Bitcoin Infinity Show, and somehow manages to make armchair philosophy, Austrian economics, and dad jokes all part of the same conversation. Let's give a big Blockchain Report welcome to Knut Svanholm, everybody! Knut, welcome to the show. We're super excited to have you. How are you this morning? Thanks for joining us.
Thank you. Thank you for having me. What a fantastic introduction. Yeah, great. Great to be here.
Oh, the pleasure is all ours, and you are a man deserving of such introductions, Knut. You have had a super interesting career, and I just want to dive into it. I mean, you spent years at sea as a captain and crew manager. Tell me, do you see any parallels between sailing ships in storms and sailing through Bitcoin's seemingly constant volatility?
Yeah. I'd say it's the freedom aspect of it all. So, like, freedom through scarcity. Like on the ocean, you're confined to this space of however big the vessel you happen to be on is, and you can't go anywhere else than that. But in that confined space, you can do exactly what you want, and there's no one that can do anything about that. So in that sense, you're free. So you're free within a system that you voluntarily signed on to. So in that sense, I think it's like very much like Bitcoin, even though the Bitcoin is a bigger vessel than most vessels on the Atlantic Ocean.
Yeah, well put. And you communicated this a bit in your first book, Sovereignty Through Mathematics, which has become an absolute classic in the space, even listed as recommended reading on michaelsaylor'shope.com site. So it begs the question, did you realize at the time you were writing this that it would end up being on so many Bitcoin syllabi?
Absolutely not. So what I did was, yeah, I had written articles for a while and put my name out there. And then I compiled the articles into a book, and I knew nothing about publishing or anything at the time. But then that compilation book was the only book I had my name to. So I thought, I'd better write a proper book, like a book about Bitcoin somehow. So my New Year's resolution for 2019 was to write a page a day for the entire year. And as you do with New Year's resolutions, I broke it after I got bored with it, and after 106 days actually. So it's more of a pamphlet than a book. And then I published it, and nobody gave a crap, except another Bitcoiner, even a core developer. I'm not going to dox his name or her name or their name, but that helped me. That was very good at editing and helped me edit the entire book, except for the last chapter, which he didn't agree with some of the ideas in the book, and therefore he didn't want his name on it. But it got a ton better because of that, and I sort of recognized that I needed some more self-criticism in my writing. The rest of the story is I brought 50 copies of this book to Baltic Honey Badger in Riga, the OG conference in 2019, and I sold 25 of them, almost all over the Lightning Network, and this was 2019, so that wasn't very easy to do, but somehow I managed that, and I gave the other 25 away to important names in Bitcoin. Like all my idols were there from the internet, and I got to know a lot of new people who weren't like recognized at the time, but in hindsight I've realized what a fantastic event that was, and how lucky I was to be there. Like I befriended Gigi and Max Hillebrand and Giacomo and all of these people that are now very well recognized names in the space, and it's so good to have been there, and it's such a good start. And then the book took off. Like after a while, it started to get a lot of attention, and I never expected that. These were scribblings from my bedroom. I had no like delusions of grandeur back then. Now I do, of course, but back then I didn't. Yeah, but that recognition sort of ignited more spark in the fire within me, and I wanted to write more and better stuff, and here we are.
I love that. You know, when I was doing my due diligences on you, I realized that despite your many successes, you have a really great sense of humor about yourself that really stuck with me. In fact, I saw that you've called yourself an armchair philosopher and even an international village idiot, which obviously is not the case. So it makes me wonder, is this just branding for humility's sake, or does it reflect something real about how you want people to kind of approach your work?
No, it's actually because I'm absolutely the humblest Bitcoiner on earth. There is no second humblest Bitcoiner. I'm the humblest one. And even I think my books are the best books ever written, like not only in Bitcoin, but that ever came out of mankind. And that coming from the humblest Bitcoiner ever means quite a lot, actually.
It does, it does. And for someone who's just getting introduced to you and your work, how do you explain what sets your books, or what you think sets your books apart from the standard like Bitcoin 101 guides that are out there?
I mean, they have a lot of similarities with other books, but they're written in a lighter tone, I think. And at the same time, they go quite deep with the philosophical ideas. And of course, they connect praxeology and Austrian economics to Bitcoin, and they dare to think far ahead into the future. I tend to try to extrapolate the thought vector as far as it wants to go into the future, which is probably how everything divided by 21 million became a thing. No one, I believe, had taken it to that extreme before. But it's the inevitable end result of having a money that is that will sooner or later be adopted by everyone on Earth and by every single value expression on Earth. That's what that means. Yeah, I think that's what they bring. They're at times more toxic than other Bitcoin books. They're fairly easy to read. I don't do a lot of references or quotes or graphs and pictures and stuff. They're text, paragraph per paragraph, every paragraph a thought nugget, and so like I'd like to think of them as thought nugget buffets, so you can go in there and have a taste of a thought every now and then.
Oh yeah, everyone loves a good buffet. I wish there were still more of them. They used to have those sneeze guards and stuff. Now I'm glad you mentioned everything divided by 21 million, because that phrase went from a meme to practically a philosophy at this point. So how did that come about, and why do you think it clicked? And a holiday. So how do you think it clicked so deeply for people in the culture? Like it's kind of grown into its own thing. It's crazy.
It's a lot of it has to do with the visualization of it. So it's not entirely mine, and I don't view the intellectual I don't like intellectual property at all. So it's a collaboration. The sentence that sparked the thing is from an article I wrote for Citadel 21 magazine, which is Hodlonaut's Bitcoin fanzine thingy that he had a couple of years back. And funnily enough, the article was published on the 21st of August 2020, which I didn't realize until after the first Infinity Day, the year after, 21st of August 2021 was celebrated. So that's just a ridiculous coincidence. But the sentence in the article was, imagine everything there is and everything that ever will be divided by 21 million. And then the article got turned into an audio version. Guy Swan read it on his pod. And then that audio version was made into a animated video by Yoni Appelberg, a very underrated Bitcoiner. It has done a lot of great work. He's got a book out called Abundance Through Scarcity, highly recommended. And I've done a handful of videos with him, and there are new videos in the works. They are coming sooner or later. But anyway, that video, I think it's our first collaboration, became that sort of spurred the meme. And I tweeted about it, and it used the graphic in a tweet that got retweeted by some really big accounts like Sailor and Adam Back and stuff. And all of a sudden, it was everywhere. And this was during COVID and during the lockdown. So I wasn't traveling a lot back then. But when I started traveling, I realized how big this thing had become. I was recognized in the streets of Miami and stuff, like a very weird thing to happen to a guy in his mid-40s. That it's just very surreal, the whole thing. And now I got a subfolder in my Everything Divided folder on my computer with tattoos from around the world, where people have tattooed the equation into their bodies. So it's a very weird journey. It has been a very weird journey for sure. The surreal doesn't end. It's like how I see it, and the other like domino effects of what this thing became is it's just absurd. What kind of life I'm living now compared to the kind of life I led back when I was in shipping. It's very different, to say the least.
Yeah, no, your journey has been a really wild and interesting one. And it's not that big of a surprise, though, to me that people have really embraced your work. I mean, you have this really unique blend of philosophy and economics and memes in your work, as we just talked about. And as we know, like, crypto and Bitcoin has always kind of been this unique space that embraced memes seemingly from the get-go. There's always kind of been this weird entertainment element to it. Why do you think memes are so effective, or such an effective way to teach Bitcoin compared to traditional finance books? Because it seems totally unique to the space.
It's funny that you should say crypto, because I just saw a very, very wonderfully confused crypto version of the equation, if you will, over Hong Kong. They had a drone show where they put the equation the wrong with the wrong way around. So it was 21 divided by infinity, and the M wasn't there. It's just 21 divided by infinity. And this is like, it applies to Bitcoin. It does not apply to crypto, because then there's no 21M anymore. Then it's just infinity divided by infinity, right? So no. It's interesting, that dichotomy. It's like the most honest and sincere thing ever, which is Bitcoin, in the same room as the most insincere things ever, which are the cryptos. So And I am a conviction deepener more than an orange pillar, I would say, and a lot of that has been telling people about the difference between Bitcoin and crypto, and that they're basically polar opposites.
Yeah, no, absolutely. And I feel like we're starting to see that now more than ever. There really is Bitcoin and then just kind of everything else. And you've done a really great job of articulating a lot of these beliefs of yours in your writing style. I took a look at some of your past work, and it isn't dry or academic. It kind of reads more like a manifesto or a passionate rant that you couldn't hold back. Was that intentional from the start, or is that just kind of your natural style of communication?
It's funny that you should say that, because now I've done re-edits of all the books, so they're as good as they can be now, and they have these new beautiful covers. This is my second book, Independence Reimagined. The reason I'm showing this one is that we're starting the Bitcoin Infinity Academy for this book next week. Releasing it as a course where Luke the Wolf and I discuss the ideas in each chapter. And there's a video per week, and we're releasing the whole thing for free on Noster, week by week, chapter by chapter. That there's a Geyser fund for that project. You can go to geyser.fund/project/infinity if you want to know more about it, or just watch the show. Where was I going with this? The manifesto thing. So when we've been editing and when we wrote an Inverse of Clown World together, he picked up on that too, that the books tend to start off as these thought nugget buffets or educational things, and then they become more and more manifesto-y as the further into them you get. And that was definitely the case for the praxeology book. I added the 3 chapters to that. That's a book I read 2 years ago. It's behind me here somewhere. And I re-edited the whole thing and basically rewrote the whole thing. So I'm very proud of that book, but it definitely goes to more and more manifesto-y territories as the further along you get, the deeper into the book you get. So I guess that's just my style of writing.
I like it. The passion shines through, and I'm glad you brought up the Inverse of the Clown World. You framed Bitcoin in that book as kind of an antidote to societal dysfunction. Can you unpack what you mean by Bitcoin being the inverse of the chaos that we're seeing everywhere today?
Well, everything that's true for fiat, the inverse of that is true for Bitcoin. And what I mean by that is, like, fiat is not voluntary. It's imposed on you. Like, you have to pay your taxes in fiat, for instance, and they can print fiat. So already there, it's in my view a criminal. That's criminal. Like, people shouldn't do that to one another. What gives any man a right to do that to anyone else? So it's like the opposite of truthfulness, whereas Bitcoin is absolutely truthful because you can check for yourself that it is. You can verify every single transaction that ever happened in Bitcoin by just looking at the data. So it's the first time in human history where the map defines the territory. And this means so much more than people think it does. Because at the end of the day, all Bitcoin is an agreement on a fixed set of rules. And the reason we agree on this specific set of rules is that it allows for totally honest money that can't be counterfeited. It allows for resistance to replicability, something we cannot copy. And that is, by the way, the first thing that struck me as odd about this technology. Like, when I first heard about it, it's like, how can that be? How can something on the internet not be copyable? Like, you can copy everything. You can just copy paste information. It's information. Of course, it can be copied. And that's the very thing that intrigued me. And it wasn't until years after that I finally clicked that the reason that you cannot copy it is because the thing you cannot copy is not on the internet, it's in your head. It's always a secret you keep from someone. So whether you actually memorize your private key, whether you memorize your 12 words or the location of your hardware wallet and the PIN code or whatnot, not your keys, not your coins still applies. So, and it's always a secret kept from everyone else. And the reason you believe that nobody else knows your secret is what makes you able to use this secret as money. Are you following me here?
Yeah.
So what that means is that every single Satoshi lives in someone's head somewhere, because the ability to move them lives in someone's head somewhere. But it's all based on probabilities and how plausible something is. So it's not very plausible that someone else owns the same or knows the same string of numbers that my private key in my private key, because it's super hard to find. There are more private keys than stars in the universe and blah, 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 all this stuff. But you don't really own your Bitcoin. You have just found a way of communicating value truthfully to your fellow man. And what that does is it removes the profitability of aggression, because I can point a gun at your head and say, give me all your Bitcoin. And I, as the attacker, have no way of knowing if you gave me all your Bitcoin or if you gave me parts of it or if you didn't have any, because you cannot prove that about any other human being right now. Theoretically, every single person on Earth could own, quote unquote, own all the Bitcoin. And we have no way of knowing. You can make educated guesses, but in the long run, it really changes our relationship with aggression. And that's the beauty of it. It really is hope. It really is peace. It's opt-in. It's totally voluntary. And you cannot corrupt the system as easily as you can with fiat, or all fiat is corrupt. So I think this is the fact that it lives within us and that it allows us to communicate now truthfully and honesty and without aggression means that we are now elevated as human beings into something better than we were, like what we were always supposed to be. It's so simple. Human beings have two means of resolving conflict, and conflict can only arise because of scarcity somewhere, like or perceived scarcity. And now we've always had two ways of resolving conflict: communication and violence. And all communication, all language is really aimed at resolving conflict somewhere, if you really think about it deeply. And now, all of a sudden, it was always more profitable in the long run for all of mankind to use communication instead of aggression. But now Bitcoin sort of points that out to each and every one of us. Like, if we're just awesome to one another and respect each other's property, and we don't violate, we live by, don't steal, then everyone is better off. What it leads to is 8 billion people working in service of 8 billion people. Everyone on Earth collaborating instead of coercing. And none of these political games, Clown World, will apply any. Like, Clown World games will not work on a Bitcoin standard. You cannot achieve wealth by working for the government or providing lubrication, as I like to call it, by accountants and tax lawyers and stuff. They're lubrication companies that make the inevitable government rape a little less a little easier to bear. But what they're selling is basically lubrication. So none of that will work. Being politically connected is not important anymore, and this levels the playing field on so many levels of society. I mean, just go to a proper Bitcoin conference and you can already feel it and live in this world. Nobody gives a shit if you're a billionaire or a bum. You will be treated with respect if your ideas are good and if your arguments are good, and you will not be treated with respect if your arguments are shit. This is the culture I fell in love with. Recently, maybe Bitcoiners have become more diplomatic. I think there's a linear relationship between how disagreeable you are and how early you were to Bitcoin. So the cypherpunks, the early cypherpunks, and Hal Finney and Satoshi and such, they were very disagreeable. They argued about everything and could never agree on anything. Except we were lucky that they could agree on something in the end and actually make Bitcoin work. And then in my generation and generations around my generation, we have slightly disagreeable, often obnoxious people on the internet, but that could at least have fun together. And when you go in your 2020s instead of the 2017s, you get your Joe Halls and your Efrat Fenningtons and you're nice people that are actually diplomatic, even though they have ANCAP ideas. So I think Bitcoin becomes more and more as Bitcoin becomes more and more for the everyday man, it also becomes more and more for the less toxic. And there's all of that is a trade-off, of course, because we needed that disagreeability and this adversarial thinking to make it work in the first place. But yeah, going into the future, I think there is a second best. And I think that second best is Bitcoin. And I think the best is what it has always been, your integrity. Bitcoin has just pointed out how insanely valuable that is. Your reputation and your integrity, like the Scarface quote, all I have in this world is my word and my balls, and I don't break them for no one. That is truer than ever on a Bitcoin standard. And hopefully it will make more and more people value themselves and their word higher, and make them more honest. At least that's what I foresee. and the system is much more beautiful than we think it is. The Beatles said, "All you need is love," and Bitcoin. That was always true. They just hadn't found the equation for it, which Satoshi did. And the solution to the equation is, of course, everything divided by 21 million, not 21 divided by infinity. Hong Kong.
Get it together, guys. Someone's getting fired. No, Knut, I really love and appreciate your ability to look at Bitcoin through this philosopher's lens. And I think you kind of touched on it before, but I would love to get into it a little bit more deeply. As in the past, you've said Bitcoin isn't just about money. It's about how people choose to live. Is that what you kind of mean by like Bitcoin? If we all were more like that, it'd be a world of more like integrity and treating people equally across the board, regardless of status or stature? Or could you expand on that a little for me?
Yeah, this is sort of, if I'd said anything like that, I sort of want to take it back, because it sort of implies that Bitcoin has other use cases than money. And I think other use cases than money are dangerous for Bitcoin. Just as,
okay.
And also, like, if I'm to unpack that a bit, I think the store of value medium of exchange is a false dichotomy. You need both for money to actually be money and function properly. So I prefer the term medium of exchange over space and time. So it's two sides of the same coin, literally. And right now, real estate is being used as a medium of exchange over time, or what people like to call a store of value, which makes real estate worse at its original functionality, like what it was intended to be, like housing for human beings. If a billionaire can buy up all the beachfront property and there are empty houses everywhere, I live in an area with a lot of empty houses, and it is because people buy them and use them as their savings account and not as their domicile. So that makes houses being used as money makes them worse as houses, if you know what I mean. The thing is that the same is true for money. So if money has other use cases than medium exchange over space and time, it becomes a worse form of money. Gold is a worse form of money because it's used in jewelry and some industrial use cases. That distorts the price signals of gold, and it makes it a worse medium of exchange and a worse unit of account. So then the same is true for Bitcoin. If you clog the chain with dick butt JPEGs, it will become a worse medium of exchange. It will be more expensive to fire up a node and more expensive to transact. So I'm a big believer in Bitcoin being money and nothing else, because that's what frees us up, and that's what we can then use for everything else. Everything divided by 21 million doesn't mean everything divided by 21 million and a dick butt JPEG. Like, it means 21 million. That's the important thing here. If we can make that happen by doing our due diligence and defending our network through our nodes, then we have a real shot at world peace. Nothing less than that.
Yeah. So it kind of sounds like you're on the Jack Dorsey train of thought, where it's like, in order for Bitcoin to truly fulfill its destiny, we will need to look at it as not just a store of value, but also as a medium of exchange. Am I getting that correctly?
No, not really. There's a nuance there.
Not really? Okay.
Sure. As I said, medium. The dichotomy is false. It doesn't matter when you spend it. It only matters that you can spend it. So
Got it.
Every medium of exchange is exchanged through time also. It's never only through space. Money is never in circulation. It always belongs to someone. And time will have to pass before it's exchanged for something else and can belong to someone else. So it has to function over time. And that's why fiat is so crap. Like gold was a good medium exchange over time because it sort of kept its value over long time periods. It was crap as a medium exchange over space because it's fucking heavy. Fiat, it's a good medium of exchange over space because you can trade the bills easily. And now with fintech apps and other abominations, you can send it quickly to your fellow man if you don't send too much of it, because then the bank and the government who really own your money will be angry for some fucking reason.
Yeah.
So fiat is a good medium of exchange over space, but not over time, because it loses value because some people have the privilege of being able to counterfeit it and print more of it. Bitcoin functions as both, it solves both problems, or at least makes provides us with a much better version of medium exchange over both space and time. They hold their value better over time, and they're easier to exchange with one another through QR codes. It's and just 12 words. The 12 magic words are actually magic. You can tell someone the 12 magic words, and after that they can do whatever they want with that Bitcoin. So there's so much here, and it's so much bigger than people think it is. That's my message here, I guess. I have, as I always do, forgotten the question.
Oh, no. I was just,
about medium exchange.
That was a good.
Yeah.
That was a great breakdown. I was just trying to. Yeah. Now you lost me. I was just so engulfed in your words. I lost my own train of thought here. But this is why you're the philosopher here. You're able to think in these bigger abstract terms and relate them to life and Bitcoin. And one thing I thought that was interesting that I was reading about you was that you once called Bitcoin a once-in-a-civilization discovery. Now, if that's true, what responsibility do writers and educators and philosophers like yourself have in shaping how people understand it going forward?
They have the responsibility to take this opportunity, this tool for emancipation seriously. And to do that, you need to do your homework. You need to understand not only how Bitcoin works, but how money works and how horrible the situation we're in really is. How much control a certain class of people have over you, and how and why you should reclaim the driver's seat of your life and take responsibility, and thereby freeing yourself from the shackles of statism and interventionism. Right? You're living in a system, if you're on fiat and still not on Bitcoin, you're living in a system where your bank account is a 2 out of 3 multisig between you, the bank, and the state. And they only need one key to stop you from using your money. And that is not a world I want to live in. And I don't want to live in a world where, or I don't want my children to grow up in a world where they're forced to do stuff instead of like the base layer of society being voluntary exchange. That's how societies should function. And we're in this paradigm where we live in the illusion of wealth rather than actual wealth. People are indebted over their ears. Even nations are indebted. Like there's like 4 nations on earth that don't have national debt, which is just think about that for a second. That's it's a disaster, and it's all self-imposed. Like we've fallen for this scam for way too long. Fiat money is fraudulent money. It's fiduciary media. It's fictitious, and we're using it because they will throw us in jail if we don't. Except if they don't know that we don't use fiat, and that's where Bitcoin comes in. So a silent revolution, a grassroots movement that is non-violent, just beautiful. Yeah, something like that.
Yeah, and I think that kind of relates. I think I've heard you talk about Bitcoin as freedom money. Is that kind of in that same train of thought? Like, how exactly do you feel like Bitcoin changes that relationship between individuals and the state? Can you go into that a little more?
Bitcoin is the antidote to the dollar and to the fiat monetary system. They cannot coexist in the long run. There is absolutely no way. This is a winner takes all game. Do we want to live in the Orwellian, omnipotent surveillance state and have a what Orwell called a constant boot to our heads in the future? Or do we want to live in freedom and make our own choices? And it's which way, Western man? It's super simple. You have the voluntary system and you have the involuntary system. And the more of us that dare to take the leap over to the voluntary system, and you don't have to do it all at once, but you can be Bitcoin curious, and hop over step by step and see what that world is like and how beautiful it is when you find it. And there are great tools nowadays that weren't around back in when I started with this for peer-to-peer and anonymous exchanges between people. There's a great app called Vexel, for instance, where you can find other Bitcoiners to trade with. In a peer-to-peer way, so everything is encrypted. It takes your phone book in your phone and encrypts it, and then matches it with other people's phone numbers. But Vexel is open source and does not own any phone numbers or any database of phone numbers. They're all hashed, so you can find like-minded people and just start living this way. It's never been easier. I urge people to get their Bitcoins not through KYC, the exchanges, but the proper way, peer-to-peer with other Bitcoiners. That is how the real revolution starts. Bitcoin is money, and Bitcoin is freedom money. It's for everyone on Earth. It's Bitcoin's for everyone is the saying, but I'd say Bitcoin is for anyone willing to do their homework.
Right. As Sailor says, we all get Bitcoin at the price we deserve, right? So you got to do that homework before you're willing to take that leap.
Yeah, and we all get paper Bitcoin at the price we deserve too, and we sell them at the price we deserve. So, it's interesting to watch this whole institutional adoption thing play out. But at the end of the day, like, this is what I want people to remember about the ETFs and the MicroStrategies and the governmental reserves of the world. All of these Bitcoins that they claim are theirs through a legal contract with a custodian are really owned by not the custodian. And as I said before, you cannot own a Bitcoin. It's just a string of information. So it's not even the custodian. It's some guy at Coinbase, or some guy at one of these custodians that actually controls the key, or a group of guys. That might be a 5 out of 7 multisig or something. But those 5 guys can fuck off and buy an island somewhere whenever they want. So all you're doing when you're buying paper Bitcoin and you don't live by not your keys, not your coins, is that you're adding a ton of risk that doesn't have to be there. And that sort of defeats the very purpose of freedom money, the very purpose of Bitcoin to begin with. It's supposed to be permissionless. In fact, it doesn't work if it isn't permissionless. If the government can dictate what a node is and say that you are free to run your node, but they get to say what a node is, then Bitcoin is not Bitcoin anymore. Then it's government coin in a Bitcoin shell, and that's not what we're here for. Like, I'm here for the final scene of Fight Club where he shoots himself in the face and all the skyscrapers fall down and an awesome Pixies song starts playing. Like, that's what I'm looking forward to. That's hyper-Bitcoinization.
I'm looking forward to shooting myself in the face and having buildings explode all around.
There's something to that. This is anarchist money. It doesn't work if it isn't. If it's all of a sudden some group or some person gets to dictate what it is, then it's not Bitcoin anymore.
Right. It sounds a lot like altcoins, right? And you talk about people effing off and buying an island. We've seen that time and again with a lot of these altcoin pump and dumps. It seems like there's tons of new ones every day. I got a feeling of where you stand on this, but I want to hear it from the horse's mouth themselves. Do you think altcoins serve any kind of purpose whatsoever? Are they all scams? Are they distractions? Like, what's your honest take on the crypto zoo that exists outside of Bitcoin?
I mean, they have to exist because optionality is the thing here. Like I said, if a single group gets to dictate what Bitcoin is and not the node runners anymore. So if the miners get to dictate what it is, if the developers get to dictate what it is, if Michael Saylor gets to dictate what it is, or the government gets to dictate what it is, then it is not Bitcoin anymore. The option to choose, the option to fork off, the option to run other code needs to be there. Having said that, all shitcoins are shit and they're all scams. And even people that say 99% of them are scams are themselves probably selling you a scam. Because why don't you go all the way? Why don't you say 100%, you coward? Like, it's if you're saying 99%, you're probably shilling a shitcoin yourself, or you're apologetic to one. Mm-hmm. So no, they're all shit. Don't fucking fall for them. Make what's much more vital for the future of the human race is to take Bitcoin seriously and defend it from all of this malicious, fiat-minded, high preference, plastic people that want to get rich quick rather than not get poor slow. It's not a get rich quick scheme. It's a don't get poor slow scheme. And the irony of all this is, like, when you have a perfect form of money, when you have deflationary money, like, inflation is there to make people consume more and more often, right? And buy more shit. Deflation makes you think again every time you want to buy something. So to me, a real Bitcoiner wears a toga and drives the shittiest car possible and rents a place somewhere where it's cheap. Does not do flashy fucking Lambos or yachts or anything. That's not the Bitcoiner way. The true Bitcoiner knows the value of owning your impulses. Like that, my grandfather had a saying, that which you can do without, you own, and that echoes in my brain every day. If you can control the urge to want something, you actually own that thing, because it no longer owns you. It's no longer hijacked your mind. And I think Bitcoin leads people closer to that insight. We don't need a ton of shit. We need human connection. And that's exactly what Bitcoin is. It allows us to be a part of the same system, of the same being. And we call that being Bitcoin. So, yeah. No, fuck shit coins.
Dude, I gotta say, I had a feeling, but I gotta tell you, I love the phrase "the Bitcoiner way," because now I finally have a way to tell my parents as to why I'm always wearing a toga and driving a Honda Civic. Mom, it's the Bitcoiner way. You don't understand. But we're talking about altcoins and the shitcoins and their total scams out there, which leads me to my next question, that despite what we're seeing right now, there's a lot of mainstream analysts out there still calling Bitcoin a scam, calling it a bubble, even as it's hitting new all-time highs. We're seeing tons of corporate adoption. What goes through your head when you're hearing that, when we're at this stage of Bitcoin's journey right now?
I don't listen to analysts. I think that's no, I don't hear them. They're noise to me. Like, one Bitcoin will equal, as long as one Bitcoin will equal one Bitcoin, I know that it will outperform fiat and probably most other things too. So I'm not worried. I put the enormous amount of $10 into shitcoins back in 2015 or something. And I had one of those multi-coin wallets. 8 of them lost value and 2 of them gained value. And I just looked at the screen and was like, there's no fucking way I can ever figure out which ones are going up and down. And do I really want to spend my days looking at screens and trying to, like, and it's like the poker boom, right? 98% or 99% of those people lost money. About about 80% of them said that they gained money, but they probably didn't. Like very few people were actually able to make money from online poker. It's the same thing with the shit coins. There's always, like, you think you're in the insider Telegram group, but there's always a group above you. Like, watch out for all these things. There's just acquiring some Bitcoin and not using it for a decade is always going to be the better tactic. It's going to outperform everything, and you don't have to do shit.
100%. I agree with that. Knut, we got to start wrapping up our time here. Before we do, though, I would love to leave our audience with one takeaway from you about Bitcoin. Is there one sentence you could give us you think our audience will actually remember after this interview? And if so, what do you think it would be?
I have a few to choose from here, but all Satoshis live in our heads. We are the network, literally and metaphorically. Think about what that implies. Think about how powerful that is. And never sell all of it.
Never sell all of it. I think those are good words to live by. All right, Knut, before we let you go, one final thing. On the show, I know you're not a big prognosticator. I think people like you and I, we're looking at Bitcoin long term, but just for fun's sake, we like to ask everybody, by the end of this year, what do you think we're going to see Bitcoin at? Just a guess. It's all for shits and giggles, so to speak. If you had to put a number, because our winner we're sending a Roxom Patagonia vest to at the end of the year, and I want that Patagonia vest to be on you. So what do you think at the end of the year, if you had to guess, where are we going to be at?
If you, first a thought about that. If you're still denominating in fiat, so you're viewing Bitcoin through this dollar lens, you're sort of missing the point. If instead you value your house in Satoshis, you can clearly see that your house is dropping in price every year. And so is everything else, including the dollar. So that's the first tip I have to people. Like, start denominating in Bitcoin. Even if it's, you just do it to see what this thing is actually doing. Like, and what the people who had more conviction than you gained from having more conviction than you did. It's never too late. It will always do this because they're absolutely finite, and 96% of them have already been mined. It will take 100 years to mine the last 4%. The last Bitcoin will take 40 years to mine. So it's absolutely insane. That's the first tip. And if I'm going to make any kind of prediction, I'm horrible at this.
It's just for fun.
Just for fun. At New Year's, is that when you?
Some previous predictions we have are 200,001, 175. I think we've had as low as 140. It's not like Price is Right, though. You can go over. We won't penalize you for that.
I'll say then, $443,000.
Oh boy, if that happens, I'm picking you up in my brand new submarine and we're going for a night on the town, Knut. That sounds great to me. 443.
I couldn't go lower than anyone else, and I had to go overshoot a bit, right?
I love it. I love it. Well, Knut, I love it. I hope it comes true. Really quick, I'm sure we have more people in our audience that are loving looking at the world of Bitcoin through your philosophical view. Where's the best place for them to check out what you're up to, get your hot takes, maybe check out some of your books? Where should I send them?
Well, we have bitcoininfinity.com. So we have the bitcoininfinityshow.com and bitcoininfinitystore.com, but you find both from bitcoininfinity.com. And I have my X account is where I do most of my. I'm still on X. I have a Noster account, and I'm doing or a Noster profile, and I'm posting there too occasionally. I always tell myself I should do it more and see it more as an actual thing than just a lifeboat if everything else should crash. By the way, Noster is the most beautiful clusterfuck on the internet. That's my opinion about that. Check out the Bitcoin Infinity Show and the Bitcoin Infinity Academy. All my books are on Amazon too if you want to get rid of your shitty fiat. But you can get them for Bitcoin on bitcoininfinity.com. Where else? No, that's probably it. I do a lot of conferencing. You can see me at the conferences if you want to, and if you want signed books.
Well, Yeah, well, I'll be taking you up on that next time I see you at one of the conferences, Knut. But this has been so fun. You have such a fun take on this world, and an interesting and unique one at that. And I'm sure our audiences, I know I do, really appreciate you coming by today and hanging out with us. And I hope you have an amazing rest of your week, and we hope to have you back sometime.
Fantastic. Thanks for having me. Happy to help.
Pleasure is all ours. All right. Okay, well, we're going to take a break here at the Blockchain Report. We'll be right back after this. Stay tuned.
It runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
All right, we're back to finish up today's bull run. Really quick again, big thanks to Knut Svanholm for joining us. He is fun. I like him. Go check out his stuff. Really fun guy. Super interesting. All right, so let's wrap things up today with our last story. Former White House crypto director Bo Hines, now moonlighting at Tether, says the U.S. will pass the Bitcoin Reserve Act before the end of this year, 2025. That would make this year historic. We're talking 2 landmark crypto laws signed by Trump in a single term. First, of course, we had the Genius Act for stablecoins. Next up, a federal strategic Bitcoin reserve. The White House already seeded a Bitcoin reserve by executive order back in March, using seized coins and forbidding any sales of those coins. The Reserve Act would lock that into law, remove any ambiguity, and create budget-neutral ways to keep buying Bitcoin without dipping into taxpayers' wallets. Meanwhile, states aren't waiting. New Hampshire authorized up to 5% of its public funds into Bitcoin. Texas and others, well, they're lining up too. So the U.S. is on the verge of making Bitcoin a formal strategic reserve asset, putting it in the same category as gold, oil, or emergency grain stockpiles. And if the U.S. really does codify Bitcoin into law as a long-term reserve, the message to the market is quite clear. Bitcoin is not going away. It's not a trade. It's a strategic asset, which means if you're not stacking sats yet, don't be surprised when your government is. All right, it's time for Bullish, Bearish, or BS. Let's wrap up the show. Run the stinger, boys. All right, let's recap today's top stories and decide if things are looking bullish, bearish, or otherwise for our beloved orange coin. To recap our first story, an economist says Bitcoin could still hit 160K by the end of this year if Q4 follows its historical trend of an average 44% spike in gains, despite the usual September slump. I'm calling bullish on this. I mean, history doesn't guarantee the future, but Bitcoin's Q4 track record is very real, and if that plays out, the upside pressure could light a rocket under the price. So I'm bullish, baby. Next story, we have Polymarket gamblers put odds at 61% that Bitcoin dips under six figures before the end of the year, pointing to whale sell-offs and high leverage in futures. Calling BS on this. Degen's betting on doom isn't market analysis. It's a bunch of baloney. Last but not least, we have ex-White House crypto director Bo Hines says the U.S. will pass the Bitcoin Reserve Act this year, locking Bitcoin into law as a strategic reserve asset alongside gold. You got to be bullish on this one, boys and girls. That's right. If Uncle Sam's stacking, you should be too. Not financial advice, but come on now. Final score, 2 bullish, 1 BS, 0 bearish. So today's diagnosis is firmly in the bulls' favor. Bitcoin may look shaky in the short term, but history, adoption, and policy momentum in its favor. So that's a wrap for today's show, boys and girls. As always, thanks for tuning into the Blockchain Report. Make sure to like, follow, and subscribe to RoxomTV and yours truly at Hank at RoxomTV on whatever your platform of choice is. And we'll be back tomorrow to wrap up the week. So I'll see you then, and sayonara.